Carefully, because what I am about to tell you is going to save some of you from financial disaster. And for others, it is going to be the wake-up call you need to protect your wealth. I am Kevin O'Leary, Mr. Wonderful, and I have been in the business of making money for over 4 decades. I have seen bubbles form, I have watched them burst, and I can tell you right now with absolute certainty that we are sitting on the edge of one of the biggest real estate bubbles this country has ever seen. And when it pops, and believe me, it will pop, a lot of people are going to lose everything. Now, before we go any further, I need you to do something for me. If you care about your financial future, if you want to protect your family's wealth, you need to hit that subscribe button right now. Smash it. Join this community. We are building something here, a group of people who understand that money is not just about making it, it is about keeping it and growing it smartly. So subscribe, become a member, and let us navigate this storm together. Do it now. All right, let me paint you a picture. Right now, across this country, people are paying prices for homes that make absolutely no sense. None. I am talking about regular folks, people making $60,000, $70,000 a year, and they are buying homes for $600,000, $700,000, sometimes more. They are stretching every dollar they have. They are taking on mortgage payments that eat up half of their income. And you know what they are telling themselves? They are saying real estate always goes up. It is a safe investment. Well, let me tell you something. That is exactly what people said in 2006, 2007. And we all know how that story ended, do we not? I have been a real estate investor my entire life. I own properties all over North America. I understand this market better than most people ever will. And I am telling you, the math does not work anymore. When you look at the fundamentals, when you strip away the emotion and the fear of missing out, what you see is a market that is completely detached from reality. Home prices have gone up 40%, 50%, in some markets even more, in just a few years. But wages, they have barely moved. So where is the money coming from? Debt. Massive, crushing debt. People are convincing themselves that they can afford these homes because interest rates were low for a while. They locked in a rate and they thought they were smart. But here is what they did not think about. What happens when property taxes go up? What happens when insurance doubles or triples, which it is doing right now in many states? What happens when the roof needs replacing or the furnace dies? Suddenly that mortgage payment they thought they could handle becomes a noose around their neck. They cannot breathe. They cannot save. And if they lose their job, even for a few months, they are done, finished. I see this happening everywhere. I talk to real estate agents, I talk to mortgage brokers, I talk to everyday Americans, and they all tell me the same thing. People are house poor. They bought the biggest house they could possibly afford, and now they have nothing left. No emergency fund, no investments, no cushion. They are living paycheck to paycheck in a house that they think is making them rich. But let me tell you a secret. A house is not making you rich if you cannot afford to live in it. Equity on paper means nothing if you are drowning in payments. And it is not just individual buyers who are in trouble. The entire system is over-leveraged. You have investors, big institutional investors, who bought up tens of thousands of homes during the pandemic. They thought they could rent them out, flip them, make a fortune. But now the rental market is softening. People cannot afford these high rents anymore. They are doubling up with roommates. They are moving back in with family. So these investors are sitting on properties that are not generating the returns they expected. And when the numbers do not work, you know what happens? They sell. And when everybody tries to sell at the same time, prices collapse. This is not fear-mongering. This is math. This is economics. When prices rise faster than incomes, when debt levels explode, when affordability disappears, you get a correction. It is inevitable. The only question is when and how bad it will be. And I am here to tell you the signs are everywhere. Inventory is starting to pile up. Homes are sitting on the market longer. Sellers are having to drop their asking prices. The cracks are forming. Now, some of you are probably thinking, Kevin, you are being too negative. The economy is strong. People have jobs. The stock market is doing well. And you are right for now. But here's what you need to understand. Bubbles do not burst when everything is going well. They burst when one thing goes wrong. It could be a recession. It could be a wave of layoffs in a key industry. It could be a spike in interest rates that makes it impossible for people to refinance or for new buyers to enter the market. All it takes is one crack, one trigger, and the whole thing comes down. I have been through this before. I watched the real estate market collapse and take the entire economy down with it. I saw people lose their homes, their savings, their retirement. And the worst part, the people who got hurt the most were not the big banks or the Wall Street investors. They got bailed out. It was the regular folks, the people who believed what they were told, who thought they were making a smart investment. Those are the people who suffered. So why am I telling you this? Because I do not want you to be one of those people. I want you to understand what is happening so you can protect yourself. If you own a home right now and you are over-leveraged, you need to think very carefully about your situation. Can you actually afford this house if something goes wrong? If you are thinking about buying a home, you need to ask yourself, am I buying because I need a place to live? Or am I buying because I am afraid of being priced out forever? Because let me tell you, fear is the worst reason to make a financial decision. The real estate market is not going to go up forever. It cannot. The laws of economics do not allow it. And when the correction comes, the people who are prepared, the people who have cash, who have not overextended themselves, those are the people who are going to win. They are going to buy up assets at discounted prices. They are going to build real wealth. But the people who ignored the warning signs, who convinced themselves that this time is different, they are going to get crushed. You need to hear what is driving this bubble and why it is about to pop. Let me break down exactly what has been inflating this bubble and why the whole thing is ready to implode. You need to understand the forces at play here, because when you see how this machine works, you will realize just how fragile it all is. This is not some complicated mystery. This is simple cause and effect, and the effect is going to be brutal. First, let us talk about the money supply. During the pandemic, the government flooded the economy with cash. Stimulus checks, expanded unemployment, loan forgiveness programs, money was everywhere. And what did people do with it? Some of them saved it, sure, but a lot of them decided it was time to buy a house. Suddenly you had millions of people with cash in their pockets competing for the same limited supply of homes. Economics 101, when demand goes up and supply stays the same, prices explode. And that is exactly what happened. But it was not just regular buyers driving up prices. You had the Federal Reserve keeping interest rates at basically zero for years. Zero. Do you know what that does? It makes borrowing money essentially free. So investors, big money investors, they borrowed millions, tens of millions, hundreds of millions of dollars at almost no cost, and they went on a buying spree. They bought single-family homes, condos, apartment buildings, everything. They were not buying to live in these places. They were buying to rent them out, to flip them, to squeeze every dollar out of them. And when you have that kind of institutional money competing with regular families trying to buy their first home, the regular families lose every single time. Then you had another factor, remote work. When the pandemic hit and everyone started working from home, people realized they did not need to live in expensive cities anymore. They could move to the suburbs, to smaller towns, to places where they could get more space for less money. Or at least that is what they thought. So you had this mass migration of people leaving places like New York, San Francisco, Los Angeles, and flooding into places like Austin, Nashville, Boise, Phoenix. And what happened? Those markets went absolutely crazy. Homes that were worth $300,000 suddenly were selling for $500,000, $600,000. It was a feeding frenzy. Now here is where it gets interesting. All of these buyers, whether they were regular folks or big investors, they were making decisions based on one critical assumption. They assumed that the conditions that existed at that moment would continue forever. Low interest rates forever, remote work forever, government money forever, rising prices forever. But in business, in investing, in life, nothing lasts forever. The conditions always change, and when they do, the people who were not prepared get wiped out. So what changed everything? The Federal Reserve realized they had created an inflation problem. Prices were going up on everything, not just houses, food, gas, cars, everything. So they did what they had to do. They started raising interest rates. And they did not just raise them a little bit, they raised them faster and more aggressively than they had in decades. Suddenly, borrowing money was not free anymore. Mortgage rates went from 3% to 7%, 8%. Do you know what that does to affordability? It cuts it in half. A family that could afford a $500,000 home at 3% can now only afford a $300,000 home at 7%. But the prices, they have not come down yet. So you have this massive gap between what people can afford and what homes cost. And the pain is not just on the buyer side. Sellers are in trouble too. A lot of these people bought homes in the last few years at the peak of the market. They paid top dollar. And now they are looking around and realizing that if they had to sell, they might not even be able to get what they paid for it. Some of them are underwater, meaning they owe more on the mortgage than the house is worth. Others are stuck. They cannot sell because they would take a loss, but they also cannot afford to keep the house because their expenses have gone up. Property taxes have skyrocketed in many areas. Insurance, like I said before, has doubled or tripled in states like Florida, Texas, California. People are trapped. Let me tell you something about trapped sellers. They are dangerous, not to anyone else, but to themselves. Because when you are trapped, when you are desperate, you make bad decisions. You hold on too long hoping the market will turn around. You drain your savings trying to keep up with payments. You borrow more money, you put it on credit cards, you dig yourself deeper and deeper into a hole, and eventually you have no choice. You have to sell, usually at the worst possible time for the worst possible price. Or worse, the bank forecloses and you lose everything. This is the cycle. This is how bubbles destroy lives. Now let us talk about the investors, the big institutional players. These guys are smart. They have armies of analysts. They have access to the best data and they can see what is coming. And you know what they are doing right now? They are quietly starting to exit. They are not dumping everything at once because that would crash the market and they would lose money. But they are selling slowly, strategically. They are getting out while they still can. And when the big money starts leaving, you better believe it is a sign. These guys do not stick around for the crash. They get out early, they protect their capital, and then they come back in after the crash to buy everything at bargain prices. That is how wealth is transferred, from the unprepared to the prepared. You also have to consider what is happening with new construction. During the pandemic, building new homes became incredibly difficult. Supply chains were broken, lumber prices went through the roof, labor was hard to find. So builders could not keep up with demand. But now a lot of those supply chain issues have been resolved and builders are ramping up production. You are going to see a lot more inventory hitting the market in the next year or two. And when supply increases and demand is falling because people cannot afford the payments, prices have to come down. There is no other outcome. Here is another thing nobody is talking about. The quality of buyers in this market has deteriorated significantly. When money was cheap and easy to get, lenders were giving mortgages to people who had no business buying a home, people with shaky credit, people with unstable income, people who put down tiny down payments or no down payment at all. These are not strong buyers. These are weak buyers. And when the economy gets tough, when layoffs start happening, these are the first people to default. And when defaults start piling up, when foreclosures start hitting the market, that is when the real carnage begins. I have seen this movie before. It is the same story every time. Easy money creates a bubble. Everyone thinks they are getting rich. Then the money gets tight. People cannot afford their payments. Defaults rise. Inventory floods the market, prices collapse, and everyone stands around asking, how did this happen? How did we not see this coming? Well, let me tell you, some of us did see it coming. We always see it coming, but nobody wants to listen because it is not what they want to hear. The truth is, most people do not understand risk. They think risk is something that happens to other people. They think they are special, they are different, they are smarter. But risk does not care who you are. Risk is mathematical. It is statistical. And when you take on too much debt, when you over-leverage yourself, when you bet everything on the assumption that prices will keep going up, you are not being smart. You are being reckless. And the market punishes recklessness every single time. You need to understand what happens next and how to protect yourself before it is too late. So what happens when this bubble finally pops? Let me walk you through it step by step because understanding the sequence of events is critical if you want to position yourself to survive and even thrive when this thing goes down. And make no mistake, there will be opportunities in this crisis, but only for the people who are prepared, who have cash, who have not overextended themselves. Everyone else is going to get destroyed. Here is how it starts. You are already seeing the early warning signs. Homes are sitting on the market longer. In a hot market, houses sell in days, sometimes hours, but now you are seeing properties sit for weeks, months. Sellers are getting nervous. They start dropping their asking prices, 5%, 10%, trying to attract buyers. But the buyers are not there because they cannot afford the payments at these interest rates. So inventory keeps building up. More and more homes for sale, fewer and fewer buyers. This is the beginning of the end. Then you get the first wave of distressed sellers. These are people who absolutely have to sell. Maybe they lost their job. Maybe they got divorced. Maybe they have an adjustable rate mortgage that just reset and their payment doubled. Whatever the reason, they are desperate. They need to get out now. So they drop their price aggressively. They take whatever they can get. And when one house in a neighborhood sells for significantly less than the others, it sets a new comparable price. Suddenly, every other house in that neighborhood is worth less too. This is how the contagion spreads. As prices start falling, you get a psychological shift. People who are thinking about buying decide to wait. Why would you buy today if you think prices are going to be lower next month? So demand drops even further. And people who own homes and were thinking about selling, they start to panic. They realize they are losing equity every day. Some of them rush to sell before prices drop more. Others decide to hold on and hope it will turn around. The ones who sell, they add to the inventory problem. The ones who hold on, many of them are going to regret it. Now the banks start to feel the pressure. When you have a wave of defaults and foreclosures, banks end up owning properties they do not want to own. They are not in the real estate business. They are in the lending business. So they need to sell these properties fast to get them off their books. And when banks are selling, they do not care about getting top dollar. They want volume. They want to move inventory. So they dump properties at whatever price the market will bear. And that drives prices down even more. This is when you see the real panic. Homeowners who thought their house was their retirement plan, their nest egg, they watch their equity evaporate. People who bought at the peak, they are now underwater. They owe more than the house is worth. And for a lot of them, the smart financial move is to walk away. Just stop making payments and let the bank take the house. Is it going to hurt their credit? Absolutely. But if you are $200,000 underwater on a house, sometimes walking away is the only rational choice. And when you get a wave of strategic defaults, when people who could make the payments choose not to because it makes no financial sense, that is when the whole system starts to crack. Let me tell you what happens to the broader economy when real estate crashes. It is not contained. It spreads everywhere. Construction workers lose their jobs. Real estate agents lose their income. Mortgage brokers, home inspectors, appraisers, title companies. All of these people depend on a healthy housing market. When home sales dry up, they are out of work. Then you have all the businesses that depend on people buying homes. Furniture stores, appliance stores, home improvement stores, they all take a hit. And when all of these people are losing their jobs or their income, they stop spending money on other things. They stop going to restaurants. They stop taking vacations. They cut back on everything. And that slowdown spreads through the entire economy. This is exactly what happened before. The real estate crash did not stay in real estate. It took down the banks, it took down the stock market, it caused a global recession. Millions of people lost their jobs who had nothing to do with real estate. That is how interconnected everything is. And the scary part is the bubble now is even bigger than it was back then. The debt levels are higher. The prices are more inflated. The fall is going to be harder. So what do you do? How do you protect yourself? First, if you are thinking about buying a home right now, do not do it unless you absolutely have to. I know that is not what you want to hear. I know everyone tells you that you need to buy now or you will be priced out forever. But that is exactly the kind of fear-based thinking that gets people into trouble. If you can rent for a reasonable price, rent. Keep your cash. Wait for the market to correct, because it will correct. And when it does, you are going to be able to buy a much better house for much less money. If you already own a home and you are comfortable with your payment, if you have a fixed rate mortgage and you are not overextended, then stay put. Ride it out. Yes, your equity might take a hit in the short term, but if you are not planning to sell, it does not matter. Real estate is a long-term investment. Over 20, 30 years, it generally goes up. But if you are stretched thin, if you are struggling to make your payments, you need to think very seriously about selling now before the market gets worse. I know it is hard to accept a loss. I know it hurts your ego to admit you made a mistake, but I would rather see you take a small loss now than a catastrophic loss later. For investors, this is where it gets interesting. If you have cash, if you have been sitting on the sidelines waiting for an opportunity, your time is coming. When this market crashes, there are going to be incredible deals everywhere. Foreclosures, short sales, desperate sellers willing to take pennies on the dollar just to get out. This is when generational wealth is created, but you have to be patient. You have to wait for the bottom. Do not try to catch a falling knife. Let the market hit bottom, let it stabilize, and then go in and buy everything you can. The key to surviving any financial crisis is the same: liquidity. Cash is king. If you have cash, you have options. You can wait, you can negotiate, you can take advantage of opportunities. But if all your money is tied up in an overpriced asset that is dropping in value, you are stuck. You are at the mercy of the market. This is why I have always preached diversification. Never put all your eggs in one basket. Never bet everything on one asset class. Spread your risk. Protect your downside. I also want to talk about the mental and emotional side of this because it is just as important as the financial side. When you watch your net worth drop, when you see your home value plummet, it is devastating. It is stressful. It can destroy relationships. It can destroy families. People get depressed. They make irrational decisions. You have to prepare yourself mentally for what is coming. You have to accept that there is going to be pain, but pain is temporary. If you make smart decisions, if you protect yourself, you will come out the other side okay. But if you panic, if you make emotional decisions, you will make everything worse. Here's the bottom line. We are living in a time of massive economic distortion. The government and the Federal Reserve have manipulated the markets for so long that nobody knows what anything is really worth anymore. Real estate, stocks, bonds, everything is inflated. And when you have distortion, you eventually get correction. It is the natural order of things. You cannot fight it. You cannot wish it away. All you can do is prepare for it. I have been doing this for over 40 years. I have made a fortune in real estate. I have also seen people lose everything in real estate. The difference between the winners and the losers is not luck. It is discipline. It is understanding risk. It is knowing when to be aggressive and when to be cautious. And right now, this is a time to be cautious. This is a time to protect your capital. This is a time to be smart, not greedy. So I want to leave you with this. Do not be a victim. Do not be one of those people who looks back in a few years and says, I should have seen it coming. You are seeing it right now. I am telling you right now, the real estate bubble is going to pop. The only question is whether you are going to be ready for it or whether you are going to get crushed by it. The choice is yours. If you found this valuable, if you understand the importance of what we just talked about, I need you to do something for me. Hit that like button, subscribe to this channel, become a member. We are building a community of smart investors, people who understand that protecting your wealth is just as important as making it. Share this video with your friends, with your family, with anyone who owns a home or is thinking about buying one. They need to hear this message, and leave me a comment. Tell me what you think. Tell me what you are seeing in your local market. Let us have a conversation because we are all in this together. Thank you for watching. Stay smart, stay disciplined, and remember, cash